Today I am going to talk about something that impacts, listen, if you're a home buyer or if you're a homeowner and want to refinance, or if you're a first-time buyer, listen, I'm talking about your credit score and some big changes that are happening. So that's what I'm talking about today. Stick around. Hi, welcome back. My name's Joe Brown. I'm a real estate agent with Century 21, List with Beggins, located in South Tampa. Thank you so much for being here with me today. So, as I said in the intro, I'm going to talk about credit scores. And there's some big changes that are happening. And unfortunately, some people just don't know about them. So my goal, my aim is hopefully by the end of this video, you will better understand some of the changes to credit score. So traditionally, historically, the credit score is based on FICO, right? And you've seen scores go from, 520 to 800, 850, something like that, big range. And to qualify for a mortgage, you have to be in the 600, 620. But there are some changes, and why? Because the big government entities that sponsor the majority of mortgages are Freddie Mac and Fannie Mae. And so they want to, well, we know home buying, first of all, it's great for the economy, great for the community. But a lot of people can't qualify based on credit score. So these changes are trying to be more inclusive and take other factors into consideration. So we're talking about the Vantage Point or Vantage Score 4.0 or the FICO 10T. In both of those, now listen, these aren't new. They've been around. However, their widespread use among mortgage lenders, it really hasn't been there. But that's changing because there's the push for people to buy homes. So let's take a look at some of the changes, okay? So one of the first changes is called trended data. Think about the FICO score, right? So the traditional credit score, you had a score. They looked at your account balances, how long you've had accounts, whatever. Well, you could, if you're applying for a mortgage, pay down the credit cards, right? And so at that point, your credit looks good. So the old FICO score is a snapshot in time, right? Think about it as a Polaroid picture, right? Well, these new systems, Vantage Score 4.0 and FICO 10T, think about it as a movie. It is trended data. It's going to look at your history, right? Do you always carry high balances? Do you always pay on time? All those factors, right, are figured in. It's called trended data. So what the mortgage lenders are really looking for is how the individual handles their month-to-month debt, right? It's just pretty simple, right? If I'm going to lend you money, am I going to get it back? So they want to see how people handle their debt that they have now. And are they consistent over time? So that's why they look at trended data. And another word about trended data, so the mortgage companies are looking at the debt, how people manage debt. And so if you're a home buyer, want to refinance, how you manage your current debt is crucial, right? Now, I'll be honest, I think this could hurt some people. the hope is it will definitely help some people. A second major factor is not only are they looking at trended data, but they're also going to look at alternative data. So think about the old, I won't say FICO score, but think about kids coming out of college. They want to establish credit. So what do? They apply for credit cards, or they go get a car loan or another type of loan, and they pay that back over time just to establish credit. Well, under these new methods, mortgage lenders are looking at alternative data. If you have an apartment, do you pay your rent on time? Do you pay the utility bills on time? Do you pay your cell phone bills on time? Right? This is alternative data. Now, this is great for first-time home buyers, for young people who have struggled in the past to establish credit scores. And this is going to help them establish a credit score and qualify for a mortgage. Another big change with Vantage Score 4.0 and FICO 10T is they're now looking at, it's called buy merge. So in the past, mortgage companies would pull credit reports from the big three, Experian, Equifax, right? Yeah, Experian, Equifax, and TransUnion. And so they would pull the three credit reports and compare the three reports. Well, right now it's just looking at two reports. Now, the benefit to this is hopefully it'll be less expensive for the mortgage company to research whether a person qualifies. And the hope is that the savings will be passed on to the borrower, right? So that's the hope, right? So I've talked about some big changes, right? Looking at trended data, taking a look at alternative data, taking a look at just the buy merge, right? So what does this mean for you or a borrower, right? So number one, hopefully it's more access, right? People can qualify for a mortgage. Maybe easier is not the right word, but more people can qualify for a mortgage using this new alternative approach to credit scores. Number two, if you can show, especially with the trended data and alternative data, that you pay your debts on time, you manage your monthly debt responsibly, the person could qualify for better rates, right? And that's really what we want, better rates. So that's some big advantages. So you're in this position, right? And I keep saying you, it may not be you, it may be a friend, but a borrower, right? Somebody who wants to get a mortgage. What does this mean for them? So number one, check your credit reports, right? So every year there's, I forget the name of it. I have it here. Hold on. Annualcreditreport.com. Annualcreditreport.com. You can get a free credit report. And listen, just don't look at your score. Go in and look at the transactions. Well, what credit cards have been opened? What credit cards have been closed? Look at all that. For example, myself, now, I say you need to check all that because there's so many scammers out there establishing credit under fraudulent names. Myself, I have blocked my credit score. It is frozen. What that means is even if I go to Lazy Boy and I want to take out credit to get a chair, well, I can't unless I notify the credit card company or credit bureaus and say, it's me, I'm allowing this credit check. or this credit to be opened in my name. So there's a way you can do that you'd have to check with each of the credit bureaus how to block your account. Number two, do not don't go out and get a lot of credit cards, but also in the reverse, don't chop up a lot of credit cards, because there's something called utilization, okay? And what mortgage companies want is about 30%. So what does that mean? I have a credit card with $1,000 limit. I can only use $300 of it. Now, yes, I can use $1,000 of it, but mortgage companies don't want to see me maxing out credit cards. They want to see a very low utilization, about 30%. That's why if you have credit cards you're not using, a lot of people, I'm just going to cut it up, throw it away. Well, listen, don't throw it away. Don't cut it up. Keep it open, but just don't use it, because they factor all that into utilization. You may have credit limit of $3,000 and you're only using $300 of it. That's very good utilization. So, and here's the thing, just because you have a credit limit doesn't mean you have to use it, okay? So credit card companies or mortgage lenders are going to look at the utilization. They're going to look at, are you getting a lot of credit cards at the same time? Something else that borrowers need to do, right? And this goes back to the trended data and alternative data. Pay all your debts on time, okay? Listen, mortgage companies don't want to see that you're late on payments, even if it's a cell phone bill. They want to see that you were responsible and you pay your debts on time. So that's factor number one. Pay all your debts on time. Don't be late. And finally, if you're thinking about getting a mortgage, talk to a lender early. Don't wait till you go out and find a house. It's too late at that point, right? Talk to somebody early, and they can talk to you just about the process and what they look for. And here's my other advice. Just don't talk to one lender. Talk to two or three, right? Because rates vary, what they look at varies, their customer service varies. So just don't hone yourself in. Just don't nail yourself down to one person. Look around, talk to different lenders, try and figure out what they're looking for as far as the trended data and alternative data. So listen, I hope I explained some of this new credit score better for you. Go to my website, joebrownc21.com. There's a contact me button. Shoot me an email. Leave comments below if I can clear anything up, if I wasn't clear. Thank you so much for being here with me. If you are in the market looking for a home, or you know somebody who is, have them reach out to me. Listen, there's no cost, no obligation to use me as an agent, right? We can just talk and we can share information. And if we hit it off, then we can go from there. So go to my website, joebrownc21.com. You can search for homes. There's other information out there, mortgage calculators, so forth. So thank you so much for being here with me today. And until next week, take care.